Welcome to our 2022 tax workshop with Fulbright Austria and Nathalie Goldstein from MyExpatTaxes. Nathalie does this workshop for us since a couple of years, and her tax refund software, MyExpatTaxes, is also award-winning. Nathalie's office is based in Vienna, and thank you, Nathalie, for being here.
No problem. Hi, everyone. So let's get into fun topic of taxes, but I'll start a little bit more about who I am and why I'm here today. So I'm from California. Now I'm based in Vienna, Austria, right? So beautiful place to be. I've been here since 2015, and my background's in finance and information technology. And essentially I moved abroad in 2015. And then I realized I had to still file US taxes, and it was a bit of a nightmare. I went through a lot of different firms, tried a lot of different softwares, and there's just not really anything good on the market for US expats, which is why I created MyExpatTaxes. So essentially it is, a tax software specifically for US expats to help make sure that you're not double taxed. Alrighty, what will we talk about today? Why are you here, right, on a Wednesday evening? Well, we're here to talk about Fulbright income and how that goes with US taxation. So what's taxable, how to report that taxable income, and then in general, kind of a little bit more about taxes, right? So some basics to refresh you, what's FBAR, what's FATCA, why that might be relevant to you now. And if you haven't been filing and you need to file for some reason for the past few years, not to worry too much because there are amnesty programs out there for you. So let's just jump right into it. Fulbright and US taxation. It's a little bit tricky, right? Because if you look at it from the Fulbright perspective, right? And a Fulbright, essentially, they're grants that are subject to US income taxes, but you're not going to get a 1099, you're not going to get a W-2, and there's no withholding of withholding of taxes on your grant payment. So essentially, Fulbright gives you your grant income, and the rest is up to you. But it is fully subject to US income taxes, right? But Fulbright is not going to be there to give you exactly, the normal documentation that you would expect, right? Like 1099 or W-2, which if you've ever filed taxes while you're back in the US, you're very familiar with. They don't give you that. So you're left a little bit in the dark. Now, from the IRS's perspective, any amounts paid to a US citizen for lecturing or teaching abroad is considered compensation for services rendered and is definitely taxable. So main story is if you get grant income from Fulbright, it's most likely taxable to the US. Now the question is, how do you report it? So again, you're in a situation where you have no documentation really. I mean, you do have an overview of the money you'll get, right? Kind of the start of your contract, what fees are covered, but you don't have the traditional tax documents you would normally need to file US taxes. So what that means is you have to calculate your own gross income. And I'll go a little bit into gross income on the next slide. But to kind of step back a bit, when you think about Fulbright grants, they fall into two different categories. So you'll have to figure out which category is most applicable to you. So there is scholarship income. So there's scholarship and fellowship income. And this is most common for students, but there's also compensation for personal services, so that's considered wages, and that's most common for teaching assistants. I think most folks on the call today are teaching assistants. So just again, think about when you get a grant from Fulbright, is it for kind of learning, right? Is it more of a scholarship, or is it for doing something, right? Providing a service such as a teaching assistant would do. And most of the time you'll fall into that second category. So just know that that is considered wages and salary. So it's not really considered scholarship income anymore. They're still both taxable for the most part, but a very important kind of difference to note when you're filing a US tax return. Now, if you just moved abroad in 2021 and you're filing your 2021 tax return and you're filing it for the first time abroad, it's probably really confusing, right? What should you be declaring? What should be on your US tax return? Et cetera, et cetera. So again, what is gross income, right? Because that's what it comes down to. And gross income is all the income you earned in the US and your local country. So local country being, here in Austria, or for whoever's on the call in a neighboring country, right? Slovakia, et cetera, et cetera. It's all income earned worldwide, so in the US and abroad, before taxes, expenses, and any other deductions. So whatever Fulbright is paying you, that gross amount, right? The total amount before any deductions are made from that, any taxes, any expenses, any withholdings, etc., that is gross income. And what's the date range that you need to calculate that for? Well, you need to calculate that for January 1st, 2021 to December 31st, 2021, because that's the US tax year. And again, this might be a little bit tough because obviously when you get those letters from Fulbright that kind of say how much you're going to be paid, your contract is probably starting more in September or something more aligned to the school year. But again, for the 2021 tax return, you'll have to be able to split out any amount of income that was earned between January 1st, 2021 to December 31st, 2021. And that is what you include on your 2021 tax return. Now, again, as I mentioned, how do you report that income? So if you have scholarship, right, first you'll have to determine if it's taxable or not. So as the folks on this call probably aren't really getting scholarships and more are teaching assistants, I won't go into it in depth, but just keep in mind when you get scholarship income, some portion of that might not be taxable and some portion of that may be taxable. So it's important to determine what's the taxable piece. If you use MyExpatTaxes, we do have a scholarship section where you can enter in what your scholarship is. It from Fulbright, what's used for, expenses, etc. So we can determine that taxable amount for you. But essentially, you'll have to figure out what's the taxable amount of your scholarship income and grants, and you'll have to treat it as wages. Now, if you are a teaching assistant and you get essentially a grant to be a teaching assistant, you can just assume 100% of that is taxable, right? Because that is compensation paid to you for your personal services of you working as a teaching assistant. So all of that is considered wages. And usually, a couple tips here, so a little bit more onto strategy, because when you file your first US tax return from abroad, you're going to get hit with a lot of different terminologies that you're not familiar with, such as the foreign earned income exclusion, the foreign tax credit, et cetera, et cetera. And it's a little bit tough to figure out exactly what you need. But what I would recommend for most Fulbright participants that have just moved, say in the middle of 2021, so August, September, et cetera, you just moved and you just worked a little bit for your Fulbright contract in 2021, you'll probably try to claim the foreign earned income exclusion for your foreign sourced wages. So again, any income you earn outside of the US, that is considered foreign source wages. Because when you think about money, when you earn money, it is sourced where you physically are. So if you're abroad, it's foreign wages. If you work from the US, it's US wages. So just, kind of something important to note there, but you can always use the foreign earned income exclusion to exclude the amount of income you earn abroad from your US tax return. And again, this is usually recommended for those that are filing for the first year abroad, because if you just moved in the middle of the year, you probably don't actually end up paying that much income tax to your local country. So again, since we're mostly based in Austria, I'll talk about Austria. If you just moved in the middle of 2021 and you work in Austria, of course, your income's also taxable in Austria, but most of the time you're under that taxable limit for Austria. So you actually don't really end up paying anything in 2021 for your income earned in 2021 in Austria. So therefore you have no foreign income tax credit to claim. And that's why, again, it's probably more recommended to use the foreign earned income exclusion for your foreign wages. And I'm sure this sounds like gibberish at this point, but there'll be, an opportunity for questions, and I'll continue to clarify what these points are through the next slide. So if you're panicking, don't panic. We'll continue to go through it. Now, just to call it out, because it's important as we kind of continue through this presentation for you to understand there are a couple of taxation issues that do pop up pretty commonly with Fulbright participants. The first one is, how I said I would recommend you to use the foreign earned income exclusion for the most part. You can only use it if you've been physically abroad for 330 full days. And I'll get into that. But that is one that can be tough for people that move later in the year or they move back a lot, right? So the next year, so now current year in 2022, you've moved back or you've gone back for holidays or something like that to the US. But regardless, the next one is that you might still have to file state taxes. So if you were working in 2021 and you were working, in the US before you moved abroad and you worked in a state that has state income tax, you should expect to file a state tax return. if you just have residency still in the state, that is a little bit tougher, that kind of says that you're still resident, you're still taxed on your worldwide income, you might still need to file state income tax return. So definitely 2 things to watch out for is, what are you going to do on your US tax return to make sure that you're not taxed on your Fulbright income because you're abroad? And 2, do you still need to file state income taxes? Do you still, have some type of residency in a state that usually requires a state income tax return? All right, let's start kind of breaking down all of those terms I just put in there. The first one, which is probably the most confusing, right, that we just jump right into, is what does abroad for 330 full days even mean? So the screenshot I have there is essentially from the form 2555. And that is the form that you would have in your US tax return if you're claiming the foreign earned income exclusion. And again, because you've moved in the middle of the year, right? If you moved in 2021, there's no way for you to claim the bona fide residence test on your US tax return for 2555. You would have to default to the physical presence test, which is what I've shown on the screen. And what you'll see is it'll ask what the physical presence test is based on the 12-month period from what date through what date. So this is what I mean from you have to be abroad for 330 full days. So you have to physically be outside of the US. It doesn't matter which country, as long as you're physically outside the US. So the thing is that this 12-month period is any 12-month consecutive period beginning and ending in the tax year. So beginning or ending in 2021. So I think for most folks that moved last year, again, you moved around summer, maybe you moved in, a little bit later, September or something like that. But let's just say you moved in June of 2021, or etc. You could start your physical presence test date range from June 2021 till June 2022. So it's still a 12-month period. And again, as long as it starts or ends in 2021, you're okay to use that 12-month period. But it has to be 12 consecutive months. So, you have to choose either June 2021 to June 2022, October 2021 to October 2022, etc. So it has to be 12 consecutive months. And keep in mind that even though for expats, and I'll get into the deadlines as well, for expats, tax returns are normally due June 15th of the following year. So your tax return right now would technically be due June 15th, 2022. You can always file an extension to October 15th. And then that means that you have essentially a bigger time window, because then you can file your tax return up to October 15th, 2022 and use that whole entire date range. So I hope that kind of made it a little bit easier to understand, because if you read the instructions, you'll probably just get very confused because they don't word it very well. But basically, then you would fill out what dates you're using. And then you don't see that on the screen, but what you would have underneath is you have to then outline between those 2 dates, right, the start and the ending, how many days were you in the US, right? How many days were you in a different country and how many days were you in the US? So the IRS really is making you calculate yourself to make sure that you were abroad for 330 full days. So this can be pretty tough if, again, you went back over the holidays, right? You're planning back a bigger trip in summer, and then for some reason you don't make the 330 full days. So something to keep in mind, definitely some planning is involved when it comes to US travel. And again, keeping in mind that the foreign earned income exclusion is to exclude foreign wages, which means you worked abroad, your income that you earn while physically working abroad. If you go back to the US, if you worked in the US, any income you worked in the US is considered US source income, and you cannot exclude it via the foreign earned income exclusion. So just a heads up there. So that was basically a lot of stuff to do specifically with Fulbright. So, you kind of get that overview, and now let's dial it down and go back to the basics. Right? So first of all, who even needs to file a US tax return? The people that need to file a US tax return is all US citizens or US green card holders that pass the filing requirements. So you see the filing requirements on the screen. I won't read them out to you, but a couple things to call out here, right? Is when you're thinking about how much gross income you have, how much income you have, it's always your worldwide income. So it's anything you earn in the US, anything you earn outside of the US. All types of income, right? So whether it's self-employment income, whether you have some investment income, whether it is Fulbright income, etc., any income you earn from any source throughout the entire year is considered your worldwide income and included in your gross income when you're thinking about if you have enough gross income to meet the filing requirements. Now, if any of you out there are married, right, and you're married, say, to a non-US citizen, you might be filing as married filing separately. So just a heads up, that's not a typo on the screen. It's really only $5. If you are married filing separately on your US tax return, if you make over $5, if you can buy a Starbucks, not even enough money for Starbucks abroad, right? Because I think Austria is like €5 for Starbucks. If you can get Starbucks, you got to file a US tax return. So heads up there. And something else to call out that's not necessarily on the slide deck, but if you are self-employed in any way, so if you are doing some freelancing on the side, right, doing some freelance writing, something else on the side, some type of side hustle, if you make over $400 in net self-employment income, you still have to file a US tax return, right? Regardless of any of these filing requirements. So again, age is not really a factor here. I have a lot of people say, I just turned 18, 20, 21, etc. Do I need to file a US tax return now? Nothing to do with age. It's about how much money do you make. So just a heads up there. And if you do not believe me, I have this lovely screenshot of what is included in your passport. So if you actually open up your passport to, I believe it's the back section, you will see this lovely reminder that if you have a US passport, you should probably be filing US taxes regardless of where you decide to use your passport in the world. So I know, lovely news, right? Now, if you don't have to file a tax return, you might still want to, right? And this is kind of the crazy things that have happened in, okay, well, obviously we all know the crazy thing that's happened, but this is one of the effects of the crazy thing that just happened in the past few years is the stimulus payment. So if any of you have been filing taxes already, US taxes, you should have probably already gotten these stimulus payments. If you haven't filed US taxes yet, this is your chance to get a pretty big refund. So the stimulus payments were given out by the US government to any US taxpayer as long as they met the eligibility requirements. And that would be you have a valid social security number, which I'm sure all of you do have. You cannot be claimed as a dependent on a US tax return. So this one's a tough one for you, all of you out there that maybe are a little bit younger. You need to check if your parents claimed you on their US tax return, right? Because if they did, you're not eligible. But as long as they don't claim you on their US tax return, you should be eligible for the stimulus payments. And again, there is an income threshold for higher earners, but I don't think that that's a huge topic for, all of you. But just in case, like I said, you have a lot of side hustles and you have a lot of money, just a heads up, for example, a single filer, if you make over 75,000 US dollars in the year and your adjusted gross income is over 75,000 USD, then you might have a lowered stimulus payment. Now, how much are the refunds? So there were 3 rounds of stimulus payments, and the first round was $1,200 per taxpayer, and if you have a qualifying dependent, another $500 per qualifying dependent. The second round was $600 per taxpayer plus $600 per qualifying dependent, and the important thing is round 1 and round 2 is claimable on your 2020 tax return, not 2021, 2020. Now, round 3 is $1,400 per taxpayer, $1,400 per dependent, and that's claimable on your 2021 tax return if you haven't already gotten those amounts. So again, there are refunds on the table. If you've already been filing a US tax return, you should have already gotten these stimulus payments. The reason you might not have gotten these stimulus payments is if your parents claimed you as dependent on their US tax return. So go ahead and check with your parents to make sure you know if you're claimed or not claimed on their US tax return, because that's going to be very important as you're filing your own US tax return to know. And then if you haven't gotten the refunds, how are you going to claim them? Well, you can file a 2020 tax return to get round 1 and round 2, and you can file a 2021 tax return to get round 3. So what I would say is try your best to e-file these tax returns because it's going to be a lot faster for processing. Right now, the IRS is sitting under a giant mountain of paperwork. So if you send something in by paper mail, you probably won't hear back for a year. So again, if it's something that's interesting to you to get these refunds, I would highly recommend to e-file your tax returns. Okay. So when are taxes actually due? There's a lot of different dates, so it's pretty confusing, but April 15th, or at least for this year, now it's April 18th, because April 15th falls on Good Friday, so it's considered a holiday. So it comes to the next Monday, hence April 18th. But regardless, normally payments are due around April 15th. And again, regardless if you're in the US or you're abroad, if you do owe taxes, you have to pay by April 15th or the next Monday, right? Now, if you are abroad on April 15th, so most expats will be, right? You don't have to file your taxes until June 15th. This sounds very confusing because it is a chicken and egg situation. You have to normally file a tax return to know how much you have to pay, but you have to pay before you're required to file a tax return. So it's not a typo or anything there. Really, if you think you owe taxes, you should try to file by April 15th, or at least model your tax return. You can model your tax return on MyExpatTaxes at any time for free without paying. You can go ahead and model your tax return just so you know how much you have to pay. Try to pay by April 18th to avoid any late payment fees or interest. And then you can wait until June 15th to actually submit and file your return, right? So you have until June 15th to file, but if you owe, you should pay any estimated taxes before June 15th. You should pay it on April 15th. Now, when the June 15th deadline comes around, what you can do if you decide you actually need more time, right? So for example, you need to extend the time because you have to meet the physical presence test. You can file a free filing extension with Form 4868 to October 17th of this year. So MyExpatTaxes does offer these filing extensions for free. We're about to open them up in about 1 to 2 weeks. So make sure if you want to file an extension, you do at least have an account. Again, completely free at that point. We just send out an email, you just file an extension, and it's pretty straightforward. And then you have until October 17th. Now, if you owe taxes on prior tax returns, if you haven't been filing for some reason and you know that you need to file, obviously do that as soon as possible, because every single day that you're not filing a back tax return, if you do owe tax, there's interest and penalties that are accruing, right? And sometimes those penalties can get really, really extreme after a while. So definitely, if it's something that's kind of weighing you down and on your shoulders, just get it out of the way, file, rip off the Band-Aid, and then move on, right? So that's filing deadlines. Now we get into the tax forms. Again, if you're used to filing taxes, you know what the majority of these forms are, right? If you've never filed taxes, you are in for a whirlwind because you're going to see a giant tax package and basically a bunch of forms and a bunch of numbers and probably not know what's going on. So if you're interested in understanding what's in your tax package, if you're interested in understanding really financially what is being written and submitted to the US tax government, this is kind of the cheat sheet, right? So you would see a Form 1040 and a couple of different schedules that are attached to that Form 1040. And that's essentially the overview statement, right? So that's how much income you had, what deductions you can take, how much tax you owe, what's your refund. And then if you do have a child, right, you can claim the additional child tax credit. So this is available also for expats. So that would be on Schedule 8812. If you have foreign wages and you're excluding them, you would probably see a Form 2555. That's the foreign earned income exclusion, also known as FEIE. So again, as you're going out there, as you're probably Googling stuff to figure out what is going on, you're going to see some very common keywords. So if you see the number 2555, if you see foreign earned income exclusion, if you see FEIE, that is all the same thing. And that form essentially will help you exclude up to $108,700 of foreign earned income from US taxes. Now, if you pay income taxes in your local country, right, in Austria, Germany, etc., you'd probably be claiming foreign tax credit. So that would be on Form 1116, called the Foreign Tax Credit Form, also known as FTC. Again, you see any of those key terms, it's all the same thing. That's just claiming foreign income taxes paid. So every single euro you pay in Austria or Germany to the Finanzamt is not lost. You can claim it as a credit on your US tax return. You're not going to get a refund of any foreign income taxes paid, but it will help you reduce any US income taxes paid. So you're not ever double taxed. And that's kind of the biggest misconception, is that you're not double taxed by the US. For the most part, there is no real double taxation, only in a couple unique scenarios. For the most majority of expats, you do not ever get double taxed, but you just have to know how to fill out your tax forms. So If you have some other type of income, right? So for some reason, you're getting some government funded benefits from Austria or Germany or a different country, and that's not tax, but that's not earned income. You can't use foreign earned income exclusion or foreign tax credit. You'd have to use a tax treaty benefit. So the US has a lot of different tax treaties with different countries, and it's kind of up to you to figure out what tax treaty you need to apply to your situation. And that would be how you go about doing it, is using form 8833, which is essentially a blank sheet, and you fill in, per this tax treaty, per this article, I'm doing this. So obviously this is not for everyone, and you have to really be savvy about taxes to do that one on your own. But if you can do it on your own, kudos to you. Now, the other forms that people miss a lot is FBAR and form 89838. And those are kind of what are known as FATCA forms. So, you're abroad now. You obviously need to get paid somehow, which means you need a local bank account. So you probably opened up a bank account in Austria or Germany or Slovakia or wherever. And when you opened up that bank account, I am positive that they probably asked you for your US Social Security number. They asked you to sign like 10 million forms consenting that the IRS could look at your bank accounts. And that is why. This is the reason, is because they have the information from the banks about your accounts. And what you then need to do is file the FBAR and potentially form 8938 and give that back to the IRS and the US Treasury. But I'll get more into that. That is essentially just the forms to disclose your foreign financial accounts. So again, if you do a US tax return, it'll probably be 50 plus pages long. You're going to get lost into all the different forms that are being used, all the different things that are happening. But this is what the most important forms are to focus on, right? If you're interested in learning about it, you go through these forms and that will pretty much show you what is happening on your US tax return. Now, what are the expat tax benefits, right? A little bit deeper dive into those. So I keep talking about the foreign earned income exclusion because, again, that's the most relevant for Fulbright participants that just moved last year. If you didn't just move last year and you moved earlier, so in 2020, or you've been abroad for a longer period of time, you might be looking more at the foreign tax credit. But what I want to portray here is there's strategy involved. It's not simply that you're just filing a US tax return because you have to file, but you should think about, okay, what is being used and why. So if you use the foreign earned income exclusion, right, this is relatively an easy tax benefit to claim. You need form 2555. If you have lived abroad for over a year, it's pretty straightforward because you don't need to use the physical presence test, but you can use the bona fide residence test instead. And it's really good for if you're not paying a lot of tax abroad. But there are some cons to it, which is if you do have children, you cannot claim the additional child tax credit. You're disqualified from it. If you want to keep contributing to your IRA, right? If you have an IRA in the US and you want to keep contributing, this can limit how much you can contribute because it can lower your taxable compensation. So for example, if most of your compensation is, from Fulbright and you have 20,000 compensation and you exclude all of that with the foreign earned income exclusion, well, now you have zero taxable compensation, so you cannot contribute to your IRA. And for anyone that's wondering what is an IRA, it's an individual retirement account. So essentially, it's a tax favorable account that you can set up in the US that essentially helps you save up for investments or for retirement through investments. So again, if you use foreign earned income exclusion, there are a couple strict rules if you want to kind of flop back and forth. So it's not so easy to use foreign earned income exclusion 1 year, foreign tax credit in another, and then go back. You can't do that. The minute you use foreign earned income exclusion, if you revoke it, you can't use it again for 5 years. Now, let's jump to the foreign tax credit approach. As I said, any euro, any pound, whatever, any type of money you pay to a foreign government on income tax, you can normally claim back on your US tax return. And that would be through the foreign tax credit approach. It is a difficult form to use because there's different versions of it, right? There's a regular version, there's an alternative minimum tax version, which is called AMT, and there's different buckets for general income, passive income, but I will not bore you with the rest of the details because that's more for, your tax repair or MyExpatTaxes to figure out for you. But essentially, it's difficult to use because it's a lot of math involved, but it can help you claim the child tax credit. It gives you taxable compensation for IRA contributions. It also will help you get carryovers, which are very important, right? Because you can carry over any unused foreign tax credits for 10 years. So this is normally the approach MyExpatTaxes would recommend if it were pretty much the same result between foreign earned income exclusion or foreign tax credit. It's because it is a really nice flexible approach. It's just kind of difficult to do all the math through it. And again, if you have some type of other income, which is not earned income, right? Because it's maybe government funded Social Security benefits, and you don't pay taxes on it because, again, it's government funded Social Security benefits. And why would the government give you something just to tax again afterward, which I know that the US does, but most other governments don't do that, right? You would use a tax treaty approach. And it is obviously difficult because you have to understand the tax treaty. The tax treaty is not so easy to use. I'll give you a little bit of a snippet on why this is honestly very confusing for US expats. There's a tax treaty for a lot of countries. You go through the tax treaty. Okay, simple enough. There's even technical explanations, and it says pretty straightforward. This income is taxable in country A or country B. But then what you have to apply is every single tax treaty has something called a savings clause. And a savings clause essentially says, if you are a US citizen, this tax treaty does not apply to you except for a few specific paragraphs. And so, yes, it's pretty useless, these tax treaties for US citizens, because the US literally puts it in every tax treaty. Ignore this tax treaty as if it didn't even exist if you're a US citizen, except for paragraph 1, 2, and 3, etc., because we can still tax you, is what it says. So again, tax treaties are kind of difficult to use. You gotta get a feel of them. If you're confused, if I've confused you, if I have panicked you, please don't panic. That is why MyExpatTaxes exists, because it is a very confusing landscape. And in MyExpatTaxes, we will automatically figure out what's the best approach for you. We'll even give you an optimization schedule to see this is what your return would look like under the foreign earned income exclusion. This is what your return would look like under foreign tax credit. This is the best approach for you to use. And this is why we chose it for you. And then obviously, if you have some income that's applicable for tax free, we just throw it in there automatically for you. So that is the expat tax benefits. Now a little bit more to FATCA, FBAR. Why this is important? Well, FATCA is the Foreign Account Tax Compliance Act. It's a US federal law. It's annoying to say the least because it's a double reporting requirement. You have to sign off on all your foreign banks to say, yes, they can report your information back to the IRS and the US Treasury. Then you have to also report that information as well. So the IRS and the US Treasury already have a giant database of all your information. What they want is for you to also confirm that information. I don't know why. I don't know. But regardless, the main thing for you to understand is if you have over 10,000 US dollars in your foreign financial accounts meaning bank accounts, retirement accounts, investment accounts, anything like that. And there is a huge gray area if you have, a TransferWise account, if it's based in the US or if it's based abroad, if you have a PayPal account, if you have cryptocurrency, etc. We always go a little bit more conservative to say, hey, because the penalty for not filing the FBAR is up to 10,000 US dollars, not that they enforce it, but in the event they do enforce it, you don't want to be on that side of it. Just because there's really high penalties for the FBAR, we say if you have any non-US financial accounts, go ahead and throw it onto your FBAR just to be safe. Now you have to file an FBAR if the combined max balance, and I'll get a little bit more into that, but the combined max balance of all of your foreign financial accounts is over 10,000 US dollars at any point in the year. If you reach that threshold, you need to file an FBAR. It's also known as Form 114, but I think no one uses that. It's called the FBAR. Now the FBAR is a tricky one because it doesn't go to the IRS, it goes to the US Treasury. So while you complete it with your US tax return, there's a whole different place to send that form to. And again, MyExpatTaxes will, electronically e-file all of your returns exactly where they have to go. But if you're doing it yourself, just keep in mind the FBAR does not go to the IRS, it goes to the US Treasury. Now, if you have over 200,000 US dollars, and depending if you're filing jointly, et cetera, there's some different thresholds, but about 200,000 US dollars max balance combined in all your foreign financial accounts. Well, one, good for you, right? Two is you have to file Form 8938, which is essentially just a really excessive version of the FBAR. It's the same information, just even more intrusive, honestly. And you have to include that into your US tax return. There's also penalties on this form if you don't include it. Now, why I say that, please don't panic. And I always say that because I know everyone panics about US taxes and there's no reason to panic, right? But if you're doing it, don't think that you're getting taxed on what's in your bank account. The IRS will not tax you on the money you have in your foreign financial accounts. What they will tax you on is the income you make in that year, definitely, right? Which will then lead to the money in your accounts, but they will not just tax you purely on the amount of money in your account. So if your parents or someone had to help you out with the move and you got a large amount of money deposited in your foreign financial accounts, this is no red flag. This is pretty normal, right? Even if it was there for a day, it doesn't matter. The IRS will not tax you again on that. They'll tax you on income if they can, but they're not going to just tax you on money in your bank accounts. This is purely informational forms, but you do need to do them because there are penalties attached if you don't. Again, the IRS doesn't really enforce these penalties, but who knows, maybe next week they decide they want to. So you just make sure, you have your ducks all in a row and you go ahead and file these forms if you need to file them. Now we get a little bit into calculating your max, because I think this is also a huge question. If you have 3 bank accounts, 1 in the US, 2 in the UK, 2 in Austria, 2 in Germany, et cetera, basically not in the US, you ignore any US accounts, right? You ignore them. We're not talking about US accounts, only foreign financial accounts. What you would then do is calculate the maximum, not the ending balance, but the maximum balance for all of those accounts. And also, if you have any accounts where you just have signature authority on it, right? You still have to include those. So anything with your name on it. So you would find the maximum balance, and it's a little bit hard to find that. So I would recommend you look at monthly statements. Sometimes your bank will show you the max balance. I know Raiffeisen does show you the max balance. So you would look for the maximum balance, even if it was only for a second there. The second it hit a certain max, that's the max balance you use. And even if they're on different dates, right? So again, in this example, the max balance was 5K on January 1st, 6K on December 31st. Those are the 2 max balances you add up, right? And then you would add it up, you would convert it to USD. And if you're over 10,000 US dollars, you got to file an FBAR. And once you have to file an FBAR, you have to include every single foreign financial account, not just the accounts that surpass the $10,000 limit, every single account, even if there's $0 on it. So just a heads up that the FBAR is something that a lot of people miss. And if you are not sure if you have to file an FBAR or not, I say just file it, because again, the penalties are so big on it. And at the end, the FBAR is actually pretty simple. You just need to know your account number, where the account is located. If you don't know your max balance, you can even check a box that says, I don't know the max balance. But at least you tried and you submitted something to the US Treasury, so no one can ever say that you skipped out on your filing obligation. Now, if you haven't been filing, if you're freaked out, if you haven't been filing for 10 plus years, which I don't think is the case in this call, but for example, you haven't been filing for more than 3 years and you need to catch up, there is something called the streamlined procedure. I don't get into it too much because I don't think people on the call really need this, but you can go through the streamlined procedure. It's 3 back years and 6 back years of FBARs. We do go ahead and offer that. Most firms will charge up to $2,000+. We do it for 696 euros. And that's because our base fee per tax year filing is 149 euros, and that does include the FBAR already. So there is an option if you're really behind, but if you're not really behind, if maybe just 1 or 2 years behind, I mean, you just file it normally. And again, most people will get refunds because of the stimulus payments. So if you're kind of down because you have to file taxes, don't be, because at least the stimulus payments are there. So if you haven't gotten it, you will get a refund from those stimulus payments. So as you are now probably confused and thinking, I don't want to do this myself, MyExpatTaxes is there for you. So my little sales pitch, because I have to, of course, have one. But if you are looking, you can always try out MyExpatTaxes in all seriousness. It's there for you. You don't have to pay until the very end. You can at least use it to model your tax return to see if you would owe taxes, so you know to pay by April 15th. You can file an extension for free through it. So there's a lot of benefits just to at least be there. We have obviously a lot of free information as well. And if you want to work with a tax professional, if you want to just email our support team, you could always do that. And we will make sure we e-file your tax return, because if you use any other US-based tax software, if you're married to a non-US citizen, or you have to have a tax treaty benefit or something that is really common in expat tax returns, you might not be able to e-file. So it'd be really annoying to pay for someone else for them to tell you to have to paper mail it. So we will always try to e-file your tax return for you. That's the presentation, right? So I'll jump now to Q&A. I hope you have good questions for me. If you don't want to ask a question on this call, if you want to ask it more online or something like that, you can always email us, and it's team@myexpatTaxes.com. You can go to MyExpatTaxes. We have a live chat option as well. Otherwise, you can just join our Facebook group, ask questions there. There's so many different ways to reach us. So, you know, right? So tell me how I should approach the questions and I'm happy to help. I don't know if people will just kind of pop up and ask questions, if you'll pop it into a chat function. So let me know.
Thank you, Nathalie, for giving this very helpful presentation. And I would say just people try to ask the questions one after another, I would say. Thank you.
All right, I see it in the chat. So chat is honestly the easiest. So if you have questions, pop them in the chat. So concerning the foreign tax credit, if we got a tax refund back from Austria for 2021 taxes, but receiving money back in 2022, do we report the amount of taxes we originally paid or the amount after the refund? You always report the amount after the refund, because if you're using the foreign tax credit, what you report is actual income taxes paid, right? So if you know that you haven't paid that amount because you're getting a refund, make sure to report only the amount paid. Of course, obviously, if you don't know about the refund till later, you would just have to amend your tax return afterwards. I hope that answered your question. Perfect. I see one that says general question for most Austria USTAs. I don't know what this general question is. So please let me know what that general question is. But otherwise, while if you're typing, I can just give you a heads up. You know, again, for US STAs, most of the time your grant income is considered wages. So if you're going to go through MyExpatTaxes or any other software, that would just be considered wages paid from Fulbright. And what you would do is then, you know, report that on your US tax return and either exclude those wages with the foreign earned income exclusion, and or if you pay enough income tax, you would then claim, you know, income taxes paid in Austria, etc., on those wages. So there is a question about filing Austrian taxes. You can ask me. I'm not an Austrian tax accountant. Maybe I can just give you a general answer. But again, if it's a little bit too specialized, I will just tell you. But feel free to ask any questions you want. But awesome. So it looks like I answered the question, the general question about US for Austrian USTA. So I'm happy about that. Let's see. I filed foreign income exclusion, expecting to be out of the US for 330 days, but then something changes and I'm in the US for longer. What happens to me? Well, first off, you cannot e-file your return with the foreign income exclusion until you meet the end date. So that's something to note, that if you're filing your US tax return and you're claiming the foreign income exclusion and you're using the physical presence test, you'll have the start date and the end date, and you cannot e-file your return until you meet that end date. Obviously, if you just paper mail your return, you can paper mail it, right? The IRS can't stop you from paper mailing, but generally you should wait until you actually meet that 334 days abroad, because if you don't meet it, then you can't use the foreign income exclusion. So if the case is you already submitted it and you know something changed and that information on form 2555 is not accurate anymore, you would have to file an amendment. Alrighty. Did I confuse you all too much for you to ask me questions? No, I'm just kidding. If you're a dependent and received that stimulus payment, but now file a tax return for the first time this year, would receive additional stimulus payments. So if you were dependent on, it depends on which payments you're talking about, right? So if you were a dependent on I see what you mean. So if you had filed and you were included as a dependent on your parents' return and they got the third round of stimulus payments for you, you might get it on your, I don't know. I haven't tested that theory out. If someone wants to test it out, they can test it out. You shouldn't get it. That's for sure. You should not get. So if your parents already got for round 1 and round 2 and round 3, your stimulus payments because you were claimed as dependent on your tax return, and then you file now as not being claimed as dependent, you may get that third round of stimulus payments on your 2021 tax return, but you definitely shouldn't, but you may, because I can't see how the IRS would check that so easily. I don't know if that answers your question, but you can try it. Do I need to share short-term sales on German stocks on US firms? Definitely. Any income you make, you must report. That is just how the US works. So when you're thinking about stocks, cryptocurrency, regular stocks, things like that, anytime you sell, anytime you dispose, anytime you trade, that is a taxable transaction. So you definitely have to report that. Now, if you pay income taxes on that, so normally if you have German stocks, you would pay German income tax, like 25%. Obviously claim it so that you don't get double taxed in the US. Now, keeping in mind, if you, again, there's a lot of strategy involved in US tax return, and that's when I want to kind of make it clear that it's not just about filing, it's about thinking about strategy, how to make it work for you. But if you say exclude all of your income via the foreign income exclusion, you could actually make up to about 12,000 of investment income tax free on your US tax return. I don't know about your local country, but on your US tax return, you could. So to answer your question, yes, anytime you sell any stock, you trade it, you exchange it, you dispose of it in any way, you have to report it. Now, in the case I'm unable to be abroad for 330 days, do I simply file US taxes without the foreign earned income exclusion? You would pretty much just file your tax return without the foreign earned income exclusion. So you'd have your foreign wages and there would be nothing to kind of exclude that from being taxed in the US. So if you don't pay enough income taxes in your local country, you may end up owing tax to the US on that. So again, an example where you don't pay any taxes in Austria or Germany because you just simply didn't work long enough in 2021 for them to charge you, or they give you a tax refund, and then you then cannot use the foreign earned income exclusion, then on your US tax return, whatever your tax bracket is, if you don't have enough foreign income tax to cover it, that portion, you will have to pay US income tax. So is it important to file our taxes in Austria first so we know what refunds we got before filing US taxes? So it depends. I mean, if you can use the foreign earned income exclusion, there's really no reason to wait to file your US taxes because you don't need your Austrian income tax at all, because essentially when you file the foreign earned income exclusion, what happens is you exclude your foreign wages from US taxation, which means you also exclude any foreign income taxes paid, right? Because you can't have that double benefit. So again, if you can use the foreign earned income exclusion, you don't have to wait to file your Austrian taxes, but you can wait. It's also fine to wait, just file an extension. The only thing is I do warn, if you just moved abroad in mid-year, there's a lot of times where you may end up paying US tax, especially if you also worked in the US beforehand and you have a W-2 and it didn't withhold enough taxes. And now you have this foreign income that pushes you into a higher tax bracket. So yes, you can file without your Austrian tax return. You may want to at least model your tax return. Again, you can model it for free on MyExpatTaxes. It does not hurt to just see what your estimated amount of taxes owed, estimated refund, so that you can plan in advance. And then you can determine at that point if you want to wait, you want to file an extension to October 15th and wait for an Austrian tax return. Dun, dun, dun. I think that is all of the questions so far. So, I mean, I'm still here. Otherwise, we can end. I don't know. You let me know.
Is there any other question for Nathalie on US taxes? Please be so frank and ask. She's doing a great job here. Please go forward if you have any more questions.
Hi, sorry, I just kind of missed your response to Marcella's question. Could you just repeat that one more time real quick?
So yeah, in the case that you are not abroad for 330 full days, then you cannot use the foreign earned income exclusion. So you simply file your US taxes without the foreign earned income exclusion. And so again, you would have foreign wages reported, but you wouldn't be able to exclude it. So you might get taxed on it by the US. And if you don't have any foreign income tax to offset that US tax, then you may end up owing US taxes on your foreign income. That's the answer, right? So again, if yeah, of course. Alrighty. I guess I'll just kind of close up. Obviously, if someone has a question, this is your last chance, but I will close up with saying, again, I know it might be kind of a scary topic, right? Especially if you haven't really been filing US taxes before, and now you're thrown into the world of, having to file US taxes on top of being abroad, being an expat, and then realizing very quickly when you start Googling things that it's just not as simple as it should be. Don't be terrified, right? There's resources out there for you. Like I said, you don't have to go through MyExpatTaxes and file your tax return with us, but you also don't need to be scared, right? We have our Facebook group where you can ask questions. You can always email us. We have a live chat. You can always model your return just to see if you owe taxes, because that's important to know by April 15th, or in this year, April 18th. And, the resources are out there. The main thing is that you stay on top of it, right? Because you do have to file US tax return. So you need to stay on top of it, and you need to make sure that you fulfill your filing obligations, and that's essentially it. So I hope this presentation was helpful, not boring, but more helpful. I'm sure taxes are always just boring, but I tried to make it a little bit more easy to digest. So that's it. Have a great rest of your evening.
Thank you so much, Nathalie. And thank you for holding this presentation again and giving us all an insight into US taxes and how to file.